Good afternoon, everyone. I'm Angela Cavanaugh, the Executive Director of New Jersey Chapter CAI, and I'd like to welcome you to our final Wednesday webinar for the year. I'd like to thank our ultimate partners and all of the Board of Directors and the CI team for today's program. I'd now like to turn it over to Brianna Walsh of the Membership Committee. Welcome, Brianna.
Thanks, Angela. Hi, everyone. Thanks for joining us today. As Angela mentioned, my name is Brianna Walsh, and I work at Coolsys Energy Design Consulting Engineers. And most importantly, I'm a proud member of the CAI New Jersey Membership Committee. I just wanted to do a friendly reminder for everyone here to renew and ensure that your membership does not lapse so you can take advantage of all the benefits we offer. If your community or the community you manage is not yet a member of CAI New Jersey, please reach out to me or Robin at CAI New Jersey. And you can email her directly or for any board member updates directly. And you can make those, You can email her directly with any board member updates, and we can make any adjustments and changes as your board changes. For those who don't know, if you are a homeowner, you can upgrade your membership to include 3 to 15 members on your membership. And that can include resident volunteers, committee members, or those who just want to be more involved and active in CAI New Jersey for no additional cost. And we have a lot of exciting things coming up this summer and this fall. You can join us today for the Community Conversations Live, hosted by National, a webinar regarding condo safety, how strategies and best practices for community associations are evolving at 2 p.m. To register, please visit the CAI website. The 2022 committee signups are also available, which is the most effective way to get involved is to join a committee. It's the best member benefit. I can attest to that. The deadline to join a committee is Friday, October 1st, so make sure you sign up today. The highly anticipated and attended beach party will be on Friday, September 17th at Martell's, and registration is open. Also, the FAST committee will be hosting a teacher supply drive, so visit the website for their Amazon wish list and help us donate supplies that the teachers of Long Branch need as they gear up for the school year. We invite you to drop those off at the beach party. The membership committee will be hosting a new member meetup on Thursday, September 30th at 10 a.m. And we encourage all new members or members who wish to learn more about becoming involved to join us and see what CAI has to offer. We have our Pack 9 and Nosh on September 23rd at Concordia Golf Course in Monroe. Although foursomes are sold out, individual registrations and sponsorships are still available. We'd love to see you at our joint networking event for the PA and New Jersey chapters at Lambertville Station on September 28th from 5 p.m. to 7 p.m. Information is on the website, and I believe an email just went out about that as well. The conference and expo will be in person this year, so get excited. It will be at iPlay America in Freehold on Thursday, October 21st, and registration is open. Attend the pre-conference event prior to network and meet members to expand your connections. The calendar is regularly growing, so make sure you're checking the website to register for upcoming programs and events and save the dates. And I hope to see you at a CAI New Jersey event sometime soon.
Thanks, Brianna. Wow. So in addition to all of those events, we just added one more. On October 28th, we're going to be hosting our mediation training program, and that's to train our future mediators. And information for that, as well as the registration, it's available on our website. Some housekeeping rules today. All participants will be muted. Please use the question box, type your questions into the question box, and let us know which panelists you would like that question directed to. Managers, if you need a certificate for credits, please email Jennifer at JENNIFER@CAI-NJ.org. And you must be in attendance to receive a certificate. You notice the attendance for the entire presentation. Jen is out this week, so if you do email her, just give her a little time. She'll be back on Tuesday, and she will definitely get that certificate for you. We have 2 presentations today. The first one will be by WilkinGuttenplan, Tara Baldwin, and Mike Mezzo. We'll be discussing what to expect from your auditor. A little bit about our presenters. Tara Baldwin is a manager of WilkinGuttenplan and has been since 2011. Tara specializes in servicing the real estate industry. She provides audit review and compilation services to real estate entities, such as condominiums, cooperative corporations, and homeowner associations throughout New Jersey. We also have Mike Mezzo. He is a manager with WilkinGuttenplan, who's joined the firm in 2013, and since then has worked in the firm's audit and accounting department. He specializes in providing audit review and compilation services for clients in the real estate and telecommunication industries, as well as closely held businesses. Mike has developed a large client base in the common interest realty association industry. He specializes in providing audits, reviews, and agreed upon procedures, engagements in these clients. And then second, we'll have from GAF, Ed Small, Pete Smythe, and Tony DeSara. And they will be discussing roofing shingles. Ed Small is one of the GAF territory managers. He covers the state in New Jersey has been with GAF for almost 10 years. Welcome, everyone. And I would now like to turn it over to Tara and Mike. Welcome.
Thank you, Angela. I'm going to just share my screen so you can see. I think everyone can see the actual presentation now, I believe.
Yep, looks good.
Okay. So as Angela said, Mike and I will be presenting on what to expect from your auditor. So first, what is an audit? An audit is a statement of organized, is an unbiased examination and evaluation of the financials. I don't know why that's like that. Sorry, having some technical. Right. Well, an audit is evaluation, an unbiased examination and evaluation of the financial situation of an association. The main purpose is to form an independent opinion on the financial statements of the audited entity.
Yeah. So a lot of questions that we get actually when we go to present audited financial statement is, why am I even having this done? So that's one of the first questions the board sometimes ask is, you guys come out once a year, you do this audit, why, what's the point? Why do we have it done? So the first and most direct answer is that it's required. So when you're filing, when sites are first being built and developers are building sites, they have to file paperwork and get approval with the DCA in the state. So one of the requirements of that process is that they have to have a budget prepared for their full occupancy when they're going to be fully built out, and they have to anticipate all the expenses that they're going to have and so on and so forth, and where they're going to get the monies to cover that, what they expect the maintenance fees to be, and all that, all that jazz. So one of the required expenses that they have to have in there is an annual audit by an independent auditor. So as Tara mentioned before in the previous slide, it's completely unbiased, meaning that we're totally independent. We have no relationships, with anybody on the board. And if we did, we would be precluded from doing the audit. We can't have any relationships with anybody, either at management companies that are overseeing the site or any board members or anything like that. So that's the most direct reason that covers most sites as to why they have a financial audit done. There are other reasons that a site may have them done. One of the most common ones that we see is when they look for third-party, funding, whether it be for a capital project or something like that. Whenever you go to a bank or another third party, a credit union, any one of those agencies to look for funding to help cover the cost of a project or anything like that, one of the things that they're going to want to see 9 times out of 10 is some type of financial statement, to get an understanding of where the association's finances are and whether or not they're going to be able to pay back that money that they're borrowing. So people are trustworthy generally, but banks like to see that somebody else has looked at it. So the board might be maintaining the financials themselves, or they might have employed a management company to take care of the bookkeeping from them. And although, like I said, most people are trustworthy, the banks just want to make sure that an auditor and a CPA, a licensed professional, has looked at those financial reports, either being maintained by the board directly or by a management company, and kind of giving the thumbs up before the bank gets them. So it kind of gives a sense of reliance to the board that, hey, we're looking at these financials to determine if we should approve this loan. And don't worry, we can rely on these and trust that everything in the financials is accurate because we had an independent CPA come in and take a look at it. So all of this, really points to the fact that you're going to get a really useful tool out of the audit, because you're going to have a set of financial statements that you know has been reviewed by a professional, like we said, and you can use that as a tool for future financial planning, whether it be budgeting or deciding whether or not you need a loan for capital projects or things like that. It really presents a nice tool for the board for future planning.
Okay, so next we're going to show a quick video that just reviews the audit process. So a lot of times when we are going out to clients, we're going on site, talking to management companies, you know, we ask a lot of questions. You know, everyone's always like, oh no, you know, the auditor's here. So this is a quick video just to show you a little bit of the behind the scenes of the process from start to finish, so you can have a better understanding of, you know, how the audit flows.
Thank you for choosing WilkinGuttenplan as your CPA and advisory firm. The information that follows will give you an overview of our process and how we will be working together. At this point, an engagement letter has already been issued to you, reviewed by the board, signed by a board member, and WG is in receipt of it. Our next step is an initial request list. You and your accounting department will soon be receiving this through either email or SureLink, a web-based workflow software that we may use to manage items requested. This includes, but is not limited to, financial reports, board meeting minutes, required questionnaires, insurance premiums, confirmation questions to be signed by an authorized party, bank, loan, and legal, access to or receipt of various paid and unpaid invoices, important agreements and contracts held by the association, and lastly, any additional requests if the sponsor developer is still in control. Other softwares to be aware of during this process are Secure Mail and Adobe Sign. Once the initial request list and all documents are provided, we will begin audit fieldwork. Audit fieldwork is performed virtually from the office or home or on-site at a management company or at the community association. If any questions arise, WG will reach out to you, the accounting department, and/or the board to get these answered right away. The audit will go through at least 2 rounds of a review process: a complete review by the first reviewer, a partner review, and occasionally a third review by another partner. Our administrative department will then process the draft audit, and it will be sent to you and your controller. This will consist of the financial statement, representation letter, communication letter to management, and adjusted trial balance at a minimum. You can then distribute the audit to the board for your collective review. If requested, WG will present the draft audit to the board, management, and possibly the association members. Also, if requested, the audit can be finalized prior to presenting, and WG will answer and discuss any other questions related to the association. If no meeting is held, WG will reach out to you and/or a board member regarding additional questions. A board member will then sign the representation letter authorizing WG to issue the final audit. The audit will then be processed by our administrative department to be issued final. WG will release the final financial statements and communication letter to you and your controller to be distributed to the board. The association's tax return will then be prepared and sent to you and your controller for signature and mailing to the IRS. This may be sent to management via secure mail or postal service. And WG will continue to be available for questions and concerns throughout the remainder of the year and outside of the audit season. We hope these tools will help you understand the process, minimize the work on your end, and ensure ease while working with us.
Okay, so that was just a little bit behind the scenes of what goes on in the audit process and, you know, what to expect from start to finish, both the expectation from, you know, you, the board members, managers, management companies, and from us as auditors.
Thank you.
Sorry. So what kind of advice can my auditor provide? So the video highlighted, you know, how we're there throughout the year and during the audit process to provide different, you know, financial recommendations or different advice, you know, based on the financial situation of the association. So what are some of the most frequently asked questions that we get? So Mike and I both attend a ton of board meetings throughout the year. We're going on site, you know, more so pre-COVID, but we go on site to clients, we're going to management companies. And, you know, a lot of the times there's a common theme in the questions that we receive. So we put together some of the ones that were asked most frequently and, you know, just going through our answers to those and what you can expect. So one of the most common questions that we get is, how do we compare to communities of our size? So, whenever we're at a board meeting, they'll say, how do our reserves compare to other communities? How do our maintenance assessments compare to other communities? So because of the depth of clients that WilkinGuttenplan has, we are able to prepare a survey. We prepare it as of now every 3 years. The newest one will be released in time for the conference and expo. So if you're attending the expo, make sure to stop by our booth, as we'll have the most recent copy available there. But this is a summary that we can provide clients when they ask this question. So as you can see here, we have our condominium HOAs and co-ops broken down by the amount of units, and if they're a multi-story or a high-rise. And this is just a tool that we use. We compare it with all of our other clients. We input it into software, and then this comes out as the end result. So you can look here through the number of units in your community, and we go through everything from the amount of associations in that unit group, the average amount of units that each one has. We focus on different aspects of maintenance assessments, special assessments, the average amount of the township reimbursement that's being received, if that's applicable for the community, the total operating expenses and how they're broken down between administrative and other, different aspects of the balance sheet, the replacement funding, so the age of the last study, what type of funding is being used, and what the average balances are in the funds. So this is a really good tool that's available to boards and managers so that they can kind of manage their association. So if you think that your fees are low and you look at this and say, wow, our fees really are low given our group, it can also be support in, raising your fees or supporting increasing the contributions to the replacement fund. And it's very helpful. And because of, like I said, the depth of clients that we have, we're able to provide some clarity on this.
Mm-hmm. And just to give a little bit of insight as to what it's going to look like going forward. So I know it's followed the same format, but going forward, what we're looking to do, it's been that format for as long as I can remember, at least. We're going to try to have it be completely web-based going forward. So really, there'll be some type of page, or I don't know how they're going to do it, whether it be a portal or some kind of page. But basically, you're going to be able to go to our website and just answer a few questions and be able to dive down to as general or as specific information as you want. So for example, you would be prompted when you enter the website to enter, maybe a zip code, the number of units, whether you're a condo or HOA, that type of information, and then, have a very customized set of comparable information just based on the parameters that you input. So that's what we're looking to do, hopefully, fingers crossed if our IT folks that we have are able to put it all together. But like Tara said, be sure to stop by the booth at the expo for more information. It should be finalized by then. So hopefully to see a copy of it as well. So on the next slide, one of the other areas that we get a lot of questions on is sales tax. So this is a huge one. I can't tell you how many times I get emails about this. And it basically deals with just capital projects and what's deemed to be a capital project and whether or not sales tax should be charged on a project. So a resource that you can actually do right on your own is to just kind of Google the form ST8. So the New Jersey Treasury Department puts out that ST8 form. You can literally just type into Google NJ ST8. You'll get a copy of the form, the tax exemption form. On the back of that form, there's directions, and in the directions, they list some specific projects that are either exempt from sales tax or that are going to be charged sales tax. They don't qualify for the exemption. That being said, it's kind of a gray area. They lay out a few like definitive ones for you to follow, and then the rest, they kind of lay forward some protocols and let you kind of apply the theory to the situation at hand and see if you think that it should be charged or not charged. So generally speaking, any capital project is going to be exempt from sales tax. So we're going to talk about some of those specific examples on the next page, but some of the ones below that we get questions about a lot of times are actually subject to sales tax below. So we wanted to touch on those as well. So any type of repair and maintenance service, like a regular cleaning on an HVAC system, the annual maintenance on an elevator, those type of things, those are just annual maintenance. They're not capital projects. They're not going to be exempt from sales tax. Other ones are any type of landscaping services, snow clearing, security services, and parking charges. All of those are going to be applicable to sales tax and have sales tax charge. So on the next page, we could talk about some that are exempt, I believe. As we mentioned, I kind of said capital improvements, generally speaking, are always going to be exempt. And there's a little bit of caveat on this, which is what that restrictions paragraph down below indicates. So essentially, the labor is always going to be tax-free, no matter what. The product itself is viewed in the eyes of New Jersey as a tangible good. So just to give you an example, if we were talking about, say, windows, new installation of windows, the window itself is a tangible item that is sold in the state and as such is going to be subject to sales tax. However, when associations purchase a contract to have them installed, a lot of times they're buying the windows through the contractor. So the question in hand is deemed to be who is the end user of that product. So when the manufacturer of the windows sells it to the contractor is deemed to be the end user. They paid sales tax on those windows when they purchased them from the manufacturer, and that's why there's no sales tax when the contractor then turns around and sells it to the association. It's usually done in a bundle package where they're installing the windows and they're going to charge you a cost on that, but they've already paid the sales tax. And a good indication of this is, if the association was to just go to, say, Home Depot or Lowe's and buy a few windows to replace in the clubhouse, you would pay tax to, sales tax, because Home Depot is not deemed to be the end user. The actual association would be in that point. So that's the real distinction that we always recommend to look at. The vendors are very up to date and informative on this because they deal with this all the time. So by all means, feel free to ask if you're not sure who the end user is or what the ins and outs of the project are. Feel free to ask the vendor about their take on it. And then if you do have questions or just want a second opinion, always contact your financial advisor, your CPA, because they can, put in their 2 cents and give their opinion on it as well.
Another common question that we get is what can be charged to the replacement fund? So the replacement fund is where you're accumulating the large amounts of money, you're contributing a certain portion of your maintenance fees there every month. And it's really where, a lot of the bulk of the assets normally sit. So a lot of times, not even just during audit season, but throughout the year, Mike and I and everyone else at WilkinGuttenplan will get emails saying, we're having this project done or this work done. Can I use the replacement fund for this expense? So the answer to this, like most things in accounting, is, it depends. So the answer is really twofold. So the first thing would be, is this expense listed as a common element in the study? So this reinforces the fact of having an updated current engineering study. So in your study, that's kind of like your budget for the replacement fund. So you have all of your common elements listed out there and you're funding in accordance with what is listed in the study, based on the useful life and a lot of different factors that, the engineers are determining. So when you're going through, say that you need to have something with the pool replaced. If the pool is in your engineering study, then you can use replacement funds for this. One common one that we're probably seeing now more with the growth of pickleball is that people will say, we want, a pickleball court in the, can we pay for that with the replacement fund? So you do want to make sure at that point that you're updating your study to include the pickleball. So, for example, if you have a study that was done in 2015, per the, prior to the pickleball court being installed, you essentially be using money, replacement fund monies that aren't really being earmarked for pickleball since it's not in the study. So what you would want to do is have the study updated because, a pickleball court would be something that is, a common element. And then your updated study would be providing funding for that. So that's really what you want to look for, because essentially if you're taking money, for something that's not in the study, at some point down the line, you're going to have a shortfall when, you need a new roof or you need new siding or new windows, and there's not going to be those funds available because you've taken it for other things. The second aspect of the question is what kind of work is being done. So, there's a couple of different projects that while, paving is clearly, a capital improvement. Minor patchwork, that might fall more under a minor repairs. So that would be more operating in nature. Something that would be useful in the replacement fund would be a major repair that extends the useful life or a full replacement. So if you're doing maintenance or repairs that is going to extend the useful life of a common element, then it would be qualified for a replacement fund expense. Likewise, if you're doing a full replacement, if you're replacing all of the windows in the clubhouse, or you are doing a full repavement of several of the streets in the community, that would be a replacement fund expense. So some of that, you also want to look at, what's in your study, what's in your operating fund, and you can always reach out to us if you have any questions on that. So 2 important things to keep in mind with the replacement fund. The first one, as I mentioned, is having an updated study. Now more than ever, with the astronomical growth of the cost of a lot of these products, if you have a study that was done in 2017, it's probably not the same dollar value of, roof shingles, for example, if you're replacing them in 2021. So you want to really make sure that you're keeping your study updated. We usually recommend anywhere from 3 to 5 years that you have it updated with your engineer. And the second thing is that your contributions are in line with the recommended funding provided by the engineer. So you want to make sure, the engineer will usually offer a couple of different options for funding requirements. And you want to make sure that you're picking one and selecting an amount to contribute on an annual basis that is in line with those amounts indicated by the engineer. This will ensure that you have enough financial coverage when you do have some of these large expenses come through. So with that, we'll have some time for questions now. I think we came in right a little bit over the 20 minutes, so we have just about 5 minutes for questions.
Yep, that was perfect. Thank you both. We do have a few questions. I believe this first one is relating to the survey that you put out. Will it be interactive, a graph producing online? Would you know that at this point?
Yeah, it will be. I don't know if there will be graphs. That's a good question. We're working on what the visuals are going to look like right now. We're in the midst of that. But yes, it's going to be interactive online. And like I said, it'll be very, very kind of customized to the information that you put in. So whatever parameters you fill in based on the questions that are prompted, you'll be able to drill down and get specific results for that information.
Great. Looking forward to that. Next question. My association is installing new fencing around the perimeter on site and will be also installing garden beds and trees along the fence. Is this project exempt from sales tax?
So I did the sales tax slide, so I can jump in on that. So this is a dual faceted question because the answer is yes and no. So the fence installation, a new fence installation would be. However, like we mentioned before, the landscaping, sorry, I don't know if you could hear that. Someone is calling me on Teams. The garden beds and any kind of landscaping is not deemed to be a capital project. So you would pay sales tax on that. However, the fence installation itself would definitely be exempt from sales tax.
Okay, great. We have one more. Our HVAC system had poor performance due to clogged ducts. Our HVAC vendor removed the clog and cleaned out all debris from the venting system. Can I charge this to my replacement fund?
So if it's just regular maintenance, they're just repairing a clog, that would be more in line with an operating expense and just, regular maintenance. And you would probably want to use operating fund monies for that. If they actually had to replace pieces of the HVAC system or replace valves or a portion of the system, that would be when you would want to use replacement fund monies.
Okay, great. Those are the only questions we have right now. Please, if anyone from our audience has other questions, we'll definitely come back to Mike and Tara later on. So just hold tight. Next up, we have our speakers from GAF. Welcome.
Thank you. Thank you. Tony DeSaro with GAF. Pete, you're on mute.
Hi, everyone. This is Pete Smythe with GAF as well.
Good afternoon. This is Ed Small. How's everybody doing? Pete, you going to bring up the presentation?
Yep. Give me 2 seconds.
And while Pete's bringing that up, Ed, myself, and Pete are 3 out of the 4 territory managers on the steep slope side for New Jersey. And our information will be at the end of this presentation.
Ed, can you see it, everybody? Okay,
Yeah, we're good to go.
okay.
So, good afternoon. First of all, we would like to say thank you to everybody for the support. Not only this year, but in several years past. This business has been very good to GAF. The multifamily industry has been very good to GAF, and we don't take it lightly. We absolutely recognize it, and we're very thankful for the support that's given to us. Pete, go ahead. So when COVID hit us last year, GAF was getting ready to introduce some improvements to our timberline shingle. So we just wanted to, during this presentation, we just wanted to recap that, because once we introduced it, GAF locked our employees down, us employees down, and we, we're outside sales reps out on the road every day, and we were stuck in our homes for the whole year practically. So we just wanted to touch base on the improvements to the shingle that's now a year old or a year and a half old, and then we'll touch on the warranties. So the timberline shingle, we redesigned it. We used technology that was available to us, and we made improvements to the shingle. The main improvement that people see in the field, the contractors, the engineers that are up on the roof, is that when you take the shingle out of the bundle, you see this wide nail zone or nail line. So that nail line is just under 2 inches wide, and we just require that the nail go anywhere in between there for a successful and accurate installation. Prior to the Timberline HDZ and this improvement, that nail line was only about 3/4 of an inch wide. Today it's 2 inches, almost 2 inches wide, and has been widely received, by everybody, the contractors, the engineers. We like to think a blind man can hit this nail zone. So, that's what you've been seeing for the last year, and it's worked out well for us. Go ahead, Pete. So how did we get there? How did we get to that wide nail zone? GAF introduced layer lock technology, and not to bore you with all the technical details, but we basically put the shingle together differently than it has been for the last 30 years. In the past, you just have one shingle on top of another, and there's some adhesive between the two or some glue, and you put them down, and when it warms up, the shingles are put together. With today's technology, GAF, has created this layer lock technology, which basically works, it's mechanically fastened. So you see those little dimples across the screen there. Those dimples are mechanically fused shingles where there's 19 punches throughout the shingle, which give the shingle better adhesion to one another, which has allowed GAF to improve our warranty, which we'll get to in a second. So we just wanted to point out to you that, if you hear the phrase layer lock technology, or if you see it on our website or on the literature, that's what it's referring to. It's referring to the brand new technology that we're using to basically put the shingle together. So because of the improvements with this new shingle, GAF was able to last year improve our wind warranty. So another marketing phrase out there is called Windproven. That's our infinite wind speed protection. So in the past, every bundle of shingles came with 110-mile-an-hour wind warranty. When you installed it with 6 nails and starter strip on the rakes and the eaves, which is the perimeter of the roof, that 110 miles an hour would go to 130 miles an hour. With this new shingle, with this new Timberline HDZ, and how it adheres better and it adheres quicker now with the temperatures, GAF has basically eliminated the wind question or the wind warranty for our shingles. Pete, go ahead. So in order to achieve the wind warranty, this wind-proven wind warranty, we just wanted to point out to you that there's some accessories that go up on the roof during the job. You have starter strip, you have deck protection, you have ridge cap, you have ventilation, and you have ice and water or a leak barrier. GAF is requiring to achieve wind proven that you use 4 out of those 5. The first 3 are mandatory, required, and then you can pick and choose between either the ventilation or the leak barrier. And we do that because, you know, there's some generic products out there that other people will make a starter strip, or guys will flip over a shingle. Our accessories are designed for our shingle. There's certain dabs of adhesive placed strategically to line up with the shingle. And we know that our products are not generic and that they work well together. So that's how, that's why we require it, and that's how we achieve the wind proven. The one thing I want to point out to you is that a lot of the jobs that are used on multifamily are golden pledge jobs, are golden pledge warranty. I'll get into that in a second, but just know, I just want you to know that if you're doing a golden pledge job, you're automatically getting wind proven. You're meeting those requirements, and it automatically just happens. So it's just another benefit for the golden pledge. Pete, go ahead. So now we're into the warranty. So we wanted to show you, you know, what a standard warranty looks like for multifamily, and we'll get into the golden pledge. So for the first 10 years, the shingles are covered at 100%. And if there's a material defect within the first 10 years, GAF is going to pay the contractor his labor, and we're going to replace the materials to fix the problem. Basically. After year 10, it prorates down.
Oops, hang on.
Where we cover the shingles only for the next 30 years. So just to reiterate, the first 10 years we covered the shingles and the labor to install it. After year 10, GAF or any other manufacturer is basically just going to give you the shingles only. And that's how the standard warranty would work for multifamily. When we do the golden pledge warranty, that 10-year coverage, material defects, extends out to 40 years now. So instead of 10-year coverage, you now have 40-year coverage. So you're picking up an extra 30 years. And not only are we covering the shingles, but we're covering all the accessories as well. So if there were a problem year 10 or year 17, year 22, GAF would pay for the labor and provide the materials to replace that problem. In addition to the material defects, we also cover the contractor's workmanship for 25 years. So we have a contractor program that's called Master Elite. These Master Elite contractors are required to do certain things with licenses and insurance, but one of the other things that's required is that we put them through testing every calendar year. And, you know, it's not like they take a written test once and they're done. They have to take it each and every year. Sometimes it's the same test, but when we do make improvements or changes, you know, we train them on how we want the shingles installed. So, you know, the difference between the golden pledge and the standard warranty is, one, you're getting more years for material defects, but the big thing is we're covering the guy's workmanship, the Master Elite's workmanship. I mean, technically, if the installer were to put the shingles on upside down and backwards, we would cover that because that would be our fault that we didn't train the guy, right? Then we would have a serious meeting with that contractor. But that's how how far we take the workmanship. Last thing we wanted to cover was the availability of shingles right now. GAF is like every other manufacturer that's been dealing with COVID, every manufacturer in building products anyway, that's been dealing with COVID. Right now, since last August, for a year now, we have not been able to keep up with the demand that's out there for our shingles. So what GAF did was a year ago was that we reduced our color offering. So the 4 colors that you see on the screen right here, charcoal, weatherwood, pewter, gray, and barkwood, these are our top 4 colors. In good times, pre-COVID, we sell these colors more than anything. Normally, Timberline comes in 14 colors. These 4 colors, just so you know, these 4 colors, when we're selling 14 colors, these 4 colors make up 75% of our sales on a normal time. So that's why we're sticking with these 4 colors. Occasionally, we run a shake wood or a slate or, you know, another color. But pretty much for the last year, we've stuck with these 4 colors, and this will continue for the remainder of this year. Once we get to January, GAF is going to reevaluate where the demand is at and where we see things going for 2022. But to get us through this year, these are the 4 colors. Now, in the multifamily world, these are the 4 colors that you guys probably use 95% of the time. Yeah, you use a slate here and there, or Williamsburg slate, or Mission Brown. But the vast majority of multifamily jobs that we see are made up of these 4 colors. So we believe that we've been able to take care of the jobs for the last year. And we don't anticipate any problems in the future either. Pete? So these are our names. The 4 of us, we cover the entire state of New Jersey. We're partners. We work together. We don't work against one another. So that's our contact information. Should anything come up down the road, feel free to contact us. Again, we'd like to thank you again for your time and your support. And we'll take any questions if you have them.
Thank you. Well, we do have one of the questions, and you already touched on this, but the question came up again, so you may want to add to it. Where do you see the industry going in 2022 regarding supplies?
So I can touch on that. So the last several years, well, I guess I should say since March 2020, when COVID began, we didn't expect the industry to be as strong as it's been since COVID started. You know, nobody really did. And what had happened was our plants, because of COVID in the beginning, our plants had shut down for a good month, maybe a little over a month. And when you have a plant that shuts down, a plant, I should say, that runs 24 hours a day, 7 days a week, and then all of a sudden it shuts down for an entire month, that's a serious disruption to GAF and the industry as a whole. So what happened was the industry, you know, everybody's home. Your single family homeowners are deciding, instead of traveling and vacationing, they're spending money on their homes. So the construction industry, roofing in particular, it just skyrocketed from middle of April 2020 until today. We didn't have a bad winter last year, if you guys remember. I think February was the only month that we had snow, and the industry didn't slow down. And because of that, we never had an opportunity to catch up on manufacturing the shingles, hence the backlog and delay in getting GAF shingles and other products in the construction industry, as well as your household industry, furniture companies, TVs, and automobiles, and things like that. So we've had conversations with corporate, and we've asked that question to our executive leadership, and nobody really knows. It all comes down to demand needs to slow down. If demand does not slow down in the industry, this will continue through 2022, at least the first half of 2022. And who knows? You know, we're kind of crossing our fingers, hoping for a snowy winter, because that would help. Obviously, we don't want the country to go into a recession, and that would slow things down, but we don't want to see that. However, we do need a slowdown in the industry. So if the roofing industry in particular, if that does slow down due to weather, we might get an opportunity to catch up, but I don't see, and corporate does not see any change within at least the next, guys, what would you say, through Q1 of 2022?
At a minimum, correct. And this is a nationwide issue too.
Yeah, this is unprecedented for us, for everybody. And it's hard to predict where we're going to be next year. I can tell you the pricing, obviously you guys see it with inflation and all different products and categories, but roofing as well. We are on our, Tony, what are we on, our 5th price increase for in 1 year?
Yes.
You know, so that's a significant amount. And there's talk of future increases coming up in early 2022. We just passed an increase yesterday of 7%. So it's a significant amount. I don't know when it's going to end, but pricing of materials, there's going to be a few more increases. So it's hard to predict where we're going to be next year.
Thank you, Pete. This question is for Mike and Tara. For small associations under 10 units, do you recommend an annual audit?
If the bylaws say that there needs to be an annual audit done, then you need to follow, what is in line with the bylaws. That's the most important thing, is that you need to be in compliance with the bylaws. If you're not, that could create a liability for the association.
And I think when it was, I don't know if that's the question from the chat, but I think towards the end they said biannual audit. So I don't know if they meant because they're smaller, like could we get away with doing an audit every other year? And if that is the question, just to address that, I wouldn't recommend that, only because you can't necessarily just do a 1-year audit. And the reason is because certain accounts are continuous. For example, a cash account or the accounts receivable or the accounts payable, those accounts never get closed out. A P&L account or an income account, like an expense account, that gets closed out every year. So we could just look at 12 months on the income statement side. However, if we came in to do an audit and we're looking at the balance sheet, we wouldn't be able to do just an audit every other year, because we'd have to look, for example, if we did an audit in 2018 and then we skipped 19 and wanted to do 2020, we now have no comfort over the beginning balances for 2020. Normally there's an audit done every year, so we know that when the balance sheet starts up, it matches the ending balance of the last year's audit. So we know that we're at a good starting point, we audited that, and everything's good going forward. If you skip to every other year, you kind of lose that starting point. So what would have to happen is that we could do the 12 months of the income statement without a problem. The balance sheet is the one that really poses a problem, because we would have to test the opening balances for that to get comfortable over that. So I'm not sure if that's what you meant by the biannual audits, but just wanted to point that out.
Okay, thank you. If there is anything else that any of your speakers want to add, we have a little time left. Okay. Well, thank you. Thank you everyone for attending. I want to remind all of our attendees that we will be sending out contact information for our speakers, so please feel free to reach out to them if you have any further questions. And this webinar will be available on our website for viewing. Thank you, everyone. Bye-bye.
Thank you, guys.
Thank you.
Take care.